Good morning, everybody, or good afternoon, and welcome to CELPIP Live. Today we've got a very special episode where we're going to be joined by Suad from the National Bank of Canada, and we're going to talk about banking vocabulary. So, welcome, Suad.
Hi Neil. How are you?
I'm doing very well. How are you?
I'm very good.
Wonderful. So, as I said, we're going to talk a little bit about banking vocabulary today, and then we're also going to have some time at the end for a little bit of a Q&A session. So, anybody who's watching, if you have any questions for Suad or myself, feel free to enter them into the chat, and we'll review them at the end of Suad's presentation. So, without further ado, Suad, if you want to bring up your slides, we can jump right in.
That's great. So, welcome everyone. I'm very happy to be here today. So, probably if you're here today, is probably you have this amazing project to come to Canada, or maybe you are already in Canada. And today we're going to cover the banking vocabulary. So, now probably you'll be reading a lot of articles, you'll be maybe talking to people, you will meet financial advisors here. And when they will tell you about the banking vocabulary, well, you will know what they're talking about. So there will be some simple words. There will be some a little bit more complicated things that I'm going to explain. So my challenge today is to make it as simple as possible. So let's go. I'm going to present my screen. So Neil, you let me know if it's all okay.
Perfect.
Here we go. Okay, let's do it then. So, knowing that the financial part, the banking management is really important when we get to a new country. So, when you will be settled in Canada, you will need to open a banking account. You will need eventually to take loans, maybe to invest, to save for some money. You will have so many projects, and you will need to know how the banking management works here. So, that's the reason today we're here to clarify so many things. So, let's start. First of all, with the different words related to the banking accounts. Before I start, as Neil was saying, feel free to ask any questions, and we'll take some minutes at the end to, it will be a pleasure for me to answer your questions. So first of all, checking accounts. You will hear a lot about checking accounts, since everybody who will be settling in Canada will have to open a banking account, which is the checking account. So actually the checking account is simply the account that everybody opens in order to put the money in it. So when you will be working, your salary will be deposited in this account, and this account will give you the possibility to do so many transactions. It could be paying your bills, purchasing in different stores, withdrawing from the ABM. So this is all things that I will explain later on. But opening a checking account is like the basic thing when you come to Canada. Then you will have the savings account. So actually the difference is that in the checking account, we do day-to-day transactions. But if we want to save some money on the side, well, sometimes it can be a little bit hard if we just leave the money in the checking account where we do so many transactions. So that's the reason it's really, I advise you actually to open this savings account in order to put some money on the side. So when you leave it there in your savings account, well, the money left in your checking account will allow you, you'll be able to spend this money, but you will put some money on the side as well, which is really important. However, for savings for the long term, there are a lot of other solutions as well. And this is what I will be explaining in the investment part. So let's continue on the banking account. You will hear about joint account, and a lot of people ask me usually, actually, is it possible to open a joint account? So yes, it would be possible to open your personal account if you wish to, but if you would like to open a joint account with the partner or the spouse, it is definitely possible, and both of you will have access to this account. A lot of people ask me usually, is it better to open a personal or joint account? Actually, it's your preference. Depending on how you want to manage your finances, both are definitely possible. So the debit card. The debit card is actually the card that we will give you instantly when you open a checking account. And with this card, you'll be able to access the money that you will have in your checking account. So with this card, you'll be able to go to the ABM, the automated banking machine, in order to withdraw money. You will use this card as well in different grocery shop, in different places for shopping, sorry for that, in order for you to pay for the things that you have purchased. So this is the debit card, and it comes automatically with a checking account. You will probably hear as well with a specimen check. A specimen check will be required when you'll be having a job, and your employer will ask you for a specimen check. So what is that? Actually, a specimen check is simply a check coming from your checking account that you will cancel and that you will give to your employer in order for him to have the banking account number for him in order to do the deposit, the direct deposit in your account. Because here in Canada, all the salary that is deposited, the salary that you will receive will be automatically deposited directly into your account. And for that, we will need a specimen check for them to know in which account to deposit the funds. The next thing is the banking account package. So maybe for some people, you'll be surprised that in Canada, for having a banking account and to make transactions, you will have to pay some fees. Because I know in many countries, like, you don't necessarily pay for fees for your banking account to make transactions. Well, this is a reality here in Canada, and actually it's all financial institutions in Canada. When you will be making transactions in your accounts, you will have to pay a certain amount for every transaction. And that's the reason it can be very expensive at the end of the month. And that's the reason there are some banking account packages. Just to give you an example, a package that could be $15 per month, and it will give you the right to do unlimited transactions. So instead of paying, for example, $1 every transaction, which could be very expensive, well, for $15 you have unlimited transactions. So there are some banking packages more expensive that give you more advantages as well. There are less as well, like for $5 or $6 you can have a certain amount of transactions. So this is something that you will hear, and eventually you will have to choose which banking account package that suits your needs. So the NTRAC e-transfers. So this is actually a great solution to transfer money. So if you need to transfer money to your friend or like whatever, someone that you need to transfer money to, well, whether if that person is in your same bank than you, or even if it's in another bank, you can make an NTRAC e-transfer and using only the phone number or the email. So you don't even need the banking account, the bank account of the person. You need only one of these two information, and then you'll be able to make a transfer to this person, even though the person has an account in another bank. So this is a very actually practical way of transferring money. So this is for the NTRAC e-transfer. And then obviously there will be the international transfers. So if you are in Canada or you're planning to come to Canada, eventually you'll be planning of transferring money to your home country. Well, it is definitely possible, and we do it through international transfer. So you transfer money in another country, and it can be done online. For National Bank, for some destinations, it can be done online, like in a very quick way. Or for some other countries, you have to go to the branch and do it at a branch. And then the financial advisor. Actually, the financial advisor is the person that is at the bank that will be there to give you advices and to help you with all the banking solutions. So once you open a checking account, you will have this financial advisor. And my advice here is to not hesitate to ask all the questions that you have and to ask for tips to your financial advisor. And especially, let him know your projects. What are your projects in the future, like long-term or short-term projects? So the advisor will be there to help you, to give you advices to make your projects a reality. So your financial advisor is a very important person in your life. So that was all the words, like the basic words that can be related to the banking account. So let's go now to the credits. And the credit, actually, we know that in Canada, there's the credit card, there's the credit history, etc. So we'll try to explain that in a simple way. Let's start with the credit card. So the credit card, actually, it is different from the debit card. What I have explained earlier is that the debit card, you receive it automatically when you open your banking account. As for the credit card, you have to request. You have to make a request to have a credit card. And then, and the credit cards in Canada are MasterCard, Visa, or American Express. And then you can receive this card. And this card, actually, it comes with a certain credit limit. So for example, you will receive a MasterCard with 1,000 credit limits. So this money, it is not your money. It is lended to you. It's a credit. And then you can use this credit limit. So for example, you have a limit of 1,000. This month you use $200. For example, you go to the grocery shopping and then you pay with your credit card. And then at the end of the month, you will receive a receipt, and then with a due date, meaning that you have to pay back this money. This is very, very important. When you have a credit card, you have to pay back and before the due date. Otherwise, you will have late payments, which is really not good for your credit history. I'll explain this later on. And if it is not possible to pay the whole amount, well, it is definitely advised to pay minimum the minimum monthly payment. So when you will be receiving your receipts, you will have the due date and you will have the minimum monthly payment. So if you're able to pay back all the money that you have spent, in my example, it will be $200. Well, it is definitely advised to pay it back all because you will not pay any interest rate. But if it is not possible for you that month, well, pay at least the minimum amount and then you will not have late payment. However, you will pay some interests. So the credit card comes with an interest rate, and it is you will have to pay them for all the amounts that you will not be paid back. So definitely what is advised, as I was saying, to pay back in total. Otherwise, and the interests actually are pretty high in the credit cards. It could be like from 20% to 30%. So as you see, it's like really high interest rates. So try not to pay interest, obviously, and especially not to be late on your payments. In some credit cards, you will have some annual fees. Actually, there are a lot of free credit cards. And what is recommended actually is when you come to Canada to start with a card without annual fees, because it really does the same thing. Like you go, you can pay with it, etc. The ones that they have annual fees, well, they have some benefits and rewards. So benefits, for example, you will have some extra warranties for different objects that you pay, or rewards such as points. You accumulate points and then you can exchange them against like many gifts or reimbursement. So these are some words that you can hear with the credit cards. And the credit cards, actually what they can do is to help you build your credit history. So if you have started maybe to look for the banking system in Canada, you have probably heard about the credit history or the credit score. And I have put it in red here because it's a very important aspect in Canada, that you have to start to build your credit history and you have to take care of your credit history. The credit history, actually, it's a score that you have that gives an idea whether you are a good payer or not, if you are a good user of credit or not. And actually, it is two organizations, which are TransUnion and Equifax, that they accumulate all the different credits that they have, and they follow whether you're a good payer or not. And there's a credit score that is given afterwards. The credit score goes from 300 to 900, and the more you have, the better it is. So if to have the best credit score is to have some credits, like you have to start build your credit first of all, but to use well your credit, which is paying always on time, not to pass the credit limit, not to have many credit cards as well. What is advised is to have 1 or 2 credit cards. Don't go over that. So if you do that, you will have a good credit history. So actually, this is a lot of information on credit history. What I advise you is to look more for that at NBC. If you go to nbc.ca at the website of National Bank, you'll find a lot of articles as well explaining more in detail the credit history. So that was the credit part. Let's continue. So let's go with some words related to online banking, since online banking is it's getting like really the common way of using banking here in Canada. And obviously it starts with a mobile app. So when you will have a banking account in any financial institution here, as for example at National Bank, you can download the mobile app, and it is amazing all the things that you can do with the app. Like, for example, you can do transfers, you can pay bills, you can deposit checks, etc. So there are a lot of things that you can do. For example, you have forgotten to pay a bill at 3 o'clock in the morning. Well, you can just pay it with your app. So it's a very accessible and easy way of doing it. Another word that you can hear is the ABM, which is the automated banking machines. So these are the different machines that you will find all around Canada, and that will allow you to withdraw money, deposit money, pay bills, to verify your how many the funds that you have in your account. So it's a way of that you don't really have to go to the branch. You can do a lot of things through the ABM or through the mobile app. Another word that you might hear of as well is the Apple Pay or the Google Pay. So here in Canada, when you go to different shops, well, it is possible to pay with these 2 ways of payment. And actually, this is an app that you download with your phone, and then with your intelligent phone, and then you can just pass it on the top of the payment machine, and your payments will go automatically. So it's a very practical way of using your phone in order to pay for the different purchases, and it's a very safe way as well of doing it. And another thing that you can do with the online banking is the mobile check deposit. So with your mobile app, actually what you can do, if you have a check, like a physical check in your hands, instead of going to the branch or going to the automated banking machine, well, you can just use the mobile app and you take a picture of your check, and then it will be deposited directly in your account. So this is a great, like very technological way of depositing the check without having of going necessarily to the branch. So this is for the online banking. Hope everything is well so far. So don't hesitate. If you have questions, you can write that down and we'll take the time to answer them at the end. So let's go now for the loans. Since when you'll be here, you'll be opening an account, etc., and you'll be doing transactions, and then probably you will have so many projects in your life, as for example, buying a house. And for buying a house, well, you will probably need a mortgage. So a mortgage, actually, it's a loan, like a loan guaranteed that we will take the home, the house, or the apartment as a guarantee, and then we'll give you a mortgage. So this loan in order for you to pay the house, and then obviously you will have to pay back. So the way it works is that to get a mortgage here, you will have to have a down payment. So the down payment, actually, it's a minimum amount that you have to put in order to have a mortgage. It is not possible, for example, to have 100% of a mortgage to buy a house. If I'm going to give examples, it's always better. For a house that the price is $500,000, for example, well, you cannot have a mortgage of $500,000. You will need a down payment. And the down payment, actually, it is 5% to 20. The minimum actually is 5%. And it can go more, obviously, on depending on what is the amount that you have. But the minimum amount that you have is 5%. So for the example of the $500,000 house, well, you will need a minimum of 25,000 K in order to have a mortgage. So this is for the down payment. Here, let's talk about the pre-approval. When you'll be when you will have this project to buy a house, you'll probably hear of the pre-approval, and I'm going to explain you what it is. And actually, it's a very practical way of starting this big project, because when you will have this project, maybe you will wonder what is the price of the house that you can have. Is it like a 500K house, or is it a 700K house, or it's a 300K house? So, and the way of knowing that before starting even to go visit different houses, well, you can get a pre-approval. And then the way it works is that you go to your financial advisor. So you tell him that you have the project to buy a house, and the financial advisor, what he's going to do is to take all your revenues, to see all the debts that you already have, and then he will give you the amount that you can afford to have a house. So then you will know, is it a 300 or 500 or whether, in order to start shopping for your house. So this is a definitely important step for you to do before starting to shop for your house, the pre-approval. And then let's say you have your pre-approval, you have found your house, you're going to take the mortgage. And for the mortgage, you will hear two different words. There's the term and the amortization. The difference between both of them is that the amortization is the total duration of your mortgage. Usually here in Canada is 25 years. It could be less, it could be more, but usually it's 25 years. So it's the total amount. And for the term, actually, it goes from a couple of months to 10 years. And this is the time that you will have your rate, because a mortgage comes with an interest rate, and there you can have a fixed rate or a variable rate. So for example, if you take a term of 5 years and you take a fixed rate, you will have the same rate for the 5 years. After the 5 years, you'll go back to the branch and to renew the mortgage, and then you might have probably another interest rate depending on the interest rate of the market. And if it is a variable rate, well, you will have it variable during the 5 years. And then after the 5 years, you go to do the renewal as well of your mortgage. And then you decide whether you take a fixed rate or another variable rate. So that was like a very quick summary of the mortgage. Like, mortgages can be a little bit more complicated than that. So definitely when you have the project to buy a house and to have a mortgage, the best way is to go to your advisor, and then he will give you much more information than that. So that was like the basics. As for the loans, they can be definitely used for different other smaller projects. So for example, you want to buy a car, you want to do a big trip, or like whether projects you have, you can take a personal loan. So that could be 5,000, 10,000, depending on the amount that you need. And then you go to the branch, and then they will see your revenues, and then they will see your credit score. And this is the same thing actually for the mortgage. They will take a look at your credit score, and it is really important to have a good credit score in order to have a mortgage or a personal loan. So the personal loan, the way it works is that it's an amount that will be given to you. For example, $5,000, you'll have it in your account, and then you will have a fixed payment every month for a term of 2 years, 3 years, 5 years, like the term can depend. And then you pay back until you pay the total amount. And there is an interest rate. It could be a fixed rate or a variable rate as well that is related to your personal loan. So this is a way of financing your projects. There is another way as well of financing your projects, and it could be a line of credit. A line of credit, actually, it's a little different from the personal loan because it's a rotating loan that we call a rotating credit, which means that, for example, you have this line of credit of 5,000. then you can use it right away, or you can use it after a couple of months or whatever, whenever you need it. And if you do not use this line of credit, well, you will not pay any interest on it. So you have this 5,000 line of credit. You use it only 6 months after you take, for example, 1,000. Well, for the 6 months that you didn't use it, you will not pay any interest. Then you take 1,000, for example, you will pay the interest on the 1,000, and then you pay it back. And then maybe you need it 2 years after. Well, the line of credit will still there available, so you can spend and then pay back, spend and pay back, and it's rotating credit, so it lasts for a long time, comparing to the personal loan that it has a term. Like, for example, 3 years, you pay back a fixed amount. After the 3 years, it closed. The line of credit, it's for more longer term. So this is another way of financing your projects. So that was about the loans, the credit, how it works in Canada. As I was saying, it's a very brief summary. And then let's go to the investment part. So here, obviously, everybody wants to save money. And there are so many projects as well that can bring us to save money. It could be for retirement. It could be for making trips. It could be for saving for the cash down for buying a house. There are so many projects. And it's really important to have an investment strategy when you settle in Canada. Once you have a revenue, well, it's important to start what I would say a systematic savings. So systematic savings, actually, it's pretty simple. It is a way of putting money on the side in a very regular way. So, for example, you have your revenue, your salary deposited in your account. Well, you can make it automatic that every 2 weeks, for example, well, there's a certain amount that you decide that goes to another account. So it could go to your savings account that we have talked earlier, or it could be in an investment solution. So the systematic savings, it's a really easy way, recommended way of putting money on the side in an automatic way. You don't have to think that you have to put money on the side. It's just done automatically. So we definitely recommend to everyone to start having systematic savings once you have a regular revenue. And now let's go to some more tricky, more complicated terms of investments. And these are terms that you will probably hear a lot. And let's try to make it simple to explain. So you will hear about RRSP. What is an RRSP? It is a registered retirement savings plan. So actually, this is what it does, is that here the government want to encourage people to save for their retirement. And when you invest in an RRSP, what happens is that there are different things that happen. First of all, the revenues that are generated by the investment are not taxable. Example, you put $5,000 in your RRSP, you earn, for example, 500 interest rate. Well, normally the 500 interest rate is taxable. You need to pay some taxes on it. But if you put it on the RRSP, these earnings will not be taxable. So you will still have the 500 in total. What's going to happen as well is that this $5,000, you can deduct this amount from your total revenue. You make 50K per year, you will deduct this amount. So instead of paying in general taxes on 50K, you will pay on 45K of revenues. So RRSP are a way of making you save some taxes. And then what happens is that you leave them normally for the time when you retire, and then you can take the money from it. So this is a way of saving money for retirement and paying less taxes. Then let's go to the RESP. So the RESP, which are the Registered Education Savings Plan, this is such an important and interesting actually way of savings for families. So families who have children who would like to save for some money on the side for their studies in the future. This is a good investment plan that actually what happens is it's the same. There are some similarities with the RRSP, meaning that if you put 5,000, for example, the earnings will not be taxable if you put it on the RRSP. But the most interesting part of this program is that the government gives some allocation as well to save more money. And the allocations could be from 20% to 40% of the amount that you have deposited, depending on the parent's revenue. So as you see, it's actually a great way of saving money for studies for kids. Not only you pay less taxes, well, you do not pay taxes on the revenues that are generated, but the government puts more money on it as well. And this is a way of encouraging like parents to save money for the studies of their children. Then let's go to the next one, which is the TFSA. What is a TFSA? Is a tax-free savings account. So this is a way as well of encouraging people to save money and pay less taxes on the revenues. So let's say you want to save money, but it is not necessarily for your retirement. You would like to have this money in 2 or 3 years, for example. And so then you can put some money on this TFSA, and the earnings that you will receive will not be taxable as well. So this is a good way of saving money and paying less taxes. However, there is a maximum of amount that can be deposited. It depends on the year. And for example, for 2023, the maximum amount that can be deposited in the TFSA is $6,500 per person. So that was for the TFSA. And then let's go to the next one. So these are different interesting programs that can be used in order to save money. But what can be deposited in these programs? Well, I'm going to give you 2 examples because there are so many solutions, like so many investments that you can choose depending on your needs, depending on your risk tolerance. I'm going to give you 2 examples. For example, the GIC. So the GIC is a guaranteed investment certificate. And actually, this is a guaranteed investment. So there is no possibility of losing money. And there is a certain interest rate that is related to that. Usually it is frozen. So for example, you take a GIC for 3 years. Well, 3 years, you cannot touch this money. So it's frozen for the 3 years. So there are different durations. It could be 1 year, it could be 5 years, etc. And there's a specific interest rate that you will have. And there is no risk of losing money. So this is one example, which is the GIC. It's for people who do not want to take any risk of losing some money. For some people who have more, they can take more risks and they would like to have more earnings. Because the more the risk we take, usually the more we can have as earnings and as interest rates returns. And mutual funds could be one solution. Actually, a mutual fund is a vehicle of a portfolio of stocks, bonds, and different securities, and they are managed by a portfolio manager. So here, there is some risk of losing money, but the earning is a little bit more. And there are different levels of risks as well, and of different mutual funds. And the advisor, when you'll be talking about mutual funds, he will have to make an analysis of your risk tolerance. And from that, the right mutual fund will be chosen for you according to your needs and according to your risk tolerance. So this is just another example of a saving solution. Another aspect as well that you can hear is the home buyer plan. So what's a home buyer plan? Actually, this is related to the RRSP. And this is a way that a program that the government, in order to help people to buy their first house, well, for people who have a lot of RRSP, people can take a certain amount from this RRSP and to put it on a down payment to buy a house. And what is the advantage of that is that when you withdraw this money from your RRSP, you are not taxed on it. So, and there's a maximum of $35,000 that a person can take from the RRSP. So you'll have it in total, and then you will have 15 years after to reimburse back your own RRSP. Actually, the difference with the home buyer plan is that normally if you have RRSP, it is normally for the retirement. But for example, let's say in 3 years, you want to take some money from the RRSP, well, you will be taxed. There are a lot of taxes that you will be paying if you withdraw money from your RRSP. So the advantage of the home buyer plan is that this program allows you to withdraw from that RRSP and not pay taxes on right away, but you will have to pay it back. You will have 15 years to pay yourself back. So this is a good way of for people who have RRSP to possible to take this money and then to have the down payment for them to allow them to buy a house. And as the same concept as well, for people who want to go back and study, if they do have RRSPs, well, they can withdraw money from their RRSPs as well with the lifelong learning plan. They can withdraw up to $20,000 to pay for their studies, and then they will have 10 years afterwards for paying back. So the investment part was a tricky part. There was a lot of information. So I definitely recommend you at the nbc.ca/advice. You will have a lot of articles as well, and you can have much more information to clarify this whole thing. That was like a brief summary. So Neil, everything is going well from your side?
Absolutely, so it looks great.
Good. So actually that was the part of the vocabulary banking. I really hope it was helpful. So let's go to the questions. But before that, I would like to tell you about our partnership. So National Bank of Canada, we have a great partnership with CELPIP and CALTEST. And actually the partnership is that if you are planning to take the CELPIP or the CALTEST, or you have just passed it, let's say a couple of weeks or months before, well, when you open an account at National Bank, anyway, you have to open an account when you come to Canada, well, we will be happy to give you a $280 cash back in your account in order to help you pay for the fees of the CAL or CELPIP test. So actually, it's our way to support you in your immigration process, etc., when you come to Canada. So you will have this $280 cash back. And in addition, actually, you will have 3 years of free banking. This is our normal promotion for newcomers. We have a special program for newcomers. So as I was saying before, there are packages that you can take for your account. And normally it's $15 for an unlimited account. And unlimited transactions, I mean, and this is what we allow you not to pay for 3 years. So 3 years of free banking with the newcomers program. And in addition to that, when you open your account through that link, well, you will have a 280 cash back in addition to the 3 years. So it's like a great offer for newcomers. If you are not in Canada already, well, you can open your account through that link. And then you can do it online. It's like very easy, very quick. And then when you come to Canada, you will have an appointment with an advisor to activate your account. And then the cashback will be deposited a couple of days afterwards. If you are already in Canada, actually a newcomer is 5 years or less. So let's say even if you're here since 3 years or 4 years, you're still eligible to the offer. So you can open your account. Really important to open it through that link in order to receive the 200 cash back. And then you will have the 3 years and the 3 years of free banking and the $280 cash back as well. So it's a very simple way of opening an account and benefiting from this cash back and the free banking.
Excellent.
So that was it for the presentation. Let's go to the questions.
Yeah, let's jump right into some questions. So I have a couple through email, and I've got one in the stream that I wanted to share out first. So let's go to that guy.
Mhm.
So Barani asked, is a specimen check the same as a void check, or are they different?
Yes, Baharani. So you totally have it. It is actually the same thing. It's two different words of saying it. So you just put like a big like this, and then to cancel the check, it cannot be used. So it's void, and you give it to the employer, and he will have the banking account number. So the salary can be deposited.
I've also seen it referred to as a sample check before, but I think the really important part, obviously, is your account number and all of your routing information for the direct deposit at the bottom of your check.
Exactly.
Excellent. Thank you very much for that question, Barani. So I've got two questions from email that I wanted to bring up as well. So our first one is from Brett, and he asked, is it possible to have savings automatically pulled from a checking account to a savings account?
Yes, definitely. So, what is recommended is you open your checking account, day-to-day transaction, you open your savings account, and your salary will be deposited in your checking account. And then, yes, it is automatic. And actually, you choose. It could be weekly, it could be bi-weekly, it could be monthly. The amount, you choose the amount as well, depending on your budget, and it will be done automatically to your savings account. So it's like really a great easy way on saving amount in on the side, and it's definitely recommended.
Perfect. Yes, I find it very helpful to have it done automatically, and then I don't even have to think about doing it.
Exactly.
Okay, so I have two more questions from email. Mohammed asked, can I open an account for my parent or for my child who is under 18?
Yes. So you can open an account for your parents. Well, obviously, well, they can open themselves, or if it is not possible for them directly, well, you have to have an authorization, like to open it for them. And yes, it is possible as well to open an account for less than 18 years old. Yes.
Perfect. So our last question for today is from Ali, and he wanted to know, is it free to set up a meeting with a financial advisor?
Yes, so it is totally free to set up with a financial advisor, and it is so recommended. As I was saying, if you need to open an account, let's say for the account, especially that you're planning to pass the CELPIP or the CAO test, well, we definitely advise you to go to open your account online with the link provided. If you are outside of Canada, actually someone will call you to set an appointment, and then you will go to that appointment and then to activate your account, and then you can talk about different projects. If you are already in Canada, actually it would be possible to open your account online 100% without having to go to the branch, and you will receive your debit card through mail. But then if you have projects to talk about, you want to save money, you want to have a loan eventually, you want to start saving for maybe a cash down for buying a house eventually, well, then definitely you can call a branch, set an appointment for free, and then talk about all your projects, and the advisor will be there to help you. Yeah.
Perfect. Okay, well, I think that's the end of our questions for today. So, Suad, thank you so much for joining us.
Well, it was such a big pleasure, and hopefully that was helpful. You know, as I was saying in the beginning, like banking management, managing your finances in a good way is really important. And one way of doing it is to be aware, is to get informed of how it works here in Canada, because the banking system is quite different from banking systems around the world. So this is the importance of being very informed to well manage your finances. And I definitely wish, on behalf of National Bank, the best luck for everybody who wants to come to Canada, who is already settled in Canada for not a long time.
Absolutely. Thank you so much, Suad. And to everybody else, thank you for joining us today, and we're looking forward to seeing you on our next installment of CELPIP Live. Bye-bye, everybody.
Bye.